Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions that you might have. What to expect short-term, long-term, what are the opportunities in the market? For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Been trading my own money for over 15 years using Tradespoon technology, right? We have a team of financial engineers that are building models to enhance our algorithms, and I use them in the live trading room on a daily basis. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, let's jump into market and see. You know, it's been a volatile week, right? We're kind of been all over the place, right, in terms of market volatility. Well, first observation is obviously VIX, right? VIX, after the carry trade, after the Bank of Japan announced that they're going to reverse their, decade-long policy of low interest rates and start raising interest rates, VIX jumped close to 70 level overnight, and obviously there were a lot of institutions, basically borrowing the money at no interest rates and purchasing other asset classes, like whether it's a Bitcoin or stocks or bonds. So everything got sold off, right, precipitously. In terms of equity, riskier asset classes. And then, the next day, I think they said, well, we're not going to lower interest rates. Sorry, we're not going to raise interest rates if market, creates liquidity issues, right, and distract, and then that kind of that trade was unwound, right? And actually, right now, if you look at the FXY, right, the Japanese yen, I mean, it's still strong, right? Kind of we've been talking about this for a few months in terms of Japanese yen being extremely weak, and that at some point the government will intervene. Right? And they tried to intervene, right, stimulate, and the yen was going higher, but it didn't create any dislocation. But when they overnight actually said, listen, we're going to start raising rates, this is when the market actually reacted. So you did have this strong move to the upside in Japanese yen, right, all the way to 63 level. Roll back, but still strong Japanese yen. So this is something to keep in mind. In terms of spiders, right? In terms of spiders, the first initial gap. This is Powell's speech on Thursday, and then Friday unemployment data, right? So outside of carry trade, before that, the focus was on the employment, right? Soft landing versus hard landing, and the idea is that if unemployment is going to tick up, right, then potentially, and credit card defaults has been on the rise, and there are, CPI, manufacturing data has been slow, house construction and activity has been slow. So then the question is it a soft landing and hard landing, right? Same questions we had in the past year and a half. So when the unemployment data on Friday ticked up from 4.1 to 4.3%, that was the initial sell-off. And this is exactly where we're trading right now, right? So the carry trade, since Bank of Japan said, well, we're going to put this decision on hold. So we closed the gap, market closed the gap, but we didn't close the gap from the Friday where, CPI, unemployment data did tick up. Yesterday, we had initial claims number that was better than expected, right? It wasn't great, but it is better than expected. And the market is oversold, and it did have a significant rally. So right now, the line in the sand is 530, right? This is the gap from Friday. It's been overhead resistance also in May. So this is your resistance number one, right? So I would say this is resistance number one. We tried to break through this resistance, right? This was a support on Friday. Then Monday we dropped, close to 200-day moving average. But this is, for the past, 5 sessions, this is where we've been trading, and this is your resistance number one, right? Bulls, want to break this above average volume and close the gap from the unemployment data, right? So this is resistance to number one. This is resistance number two. I would say this is maybe 520 is your support number 0. We looked at the positioning data, right, in terms of dealer positioning. In terms of dealer positioning, in terms of August expiration, there's still a lot of positioning at 520 and 530 level. So it looks like, at least for now, market is trading between 530 and 520. So that's your support number one. And if we are unable to hold on, if the bulls are unable to hold on to the 520 level, which we traded at least 3 sessions, then 200-day moving average and 510. I would still look at the positioning data, right? So let's see if I can recover this. And then please type in any questions you might have. I want to make sure that I get a chance to answer if you do have any questions. But in terms of dealer positioning, we are approaching next week where volatility most likely continue to rise, right? Probably, market can rally, another 2-3% next week, or it can sell off, right? What are the events? We have VIX expiration, right? So we have August expiration next week, right? Next Wednesday with VIX expiration, which creates volatility in the market, right? When people are rolling over their VIX hedges. Also, we have equity expiration. On top of that, we have CPI and PPI data, right? The inflation is still, important, and it could be interpreted in different ways now, right? If inflation data significantly drops, then again, it could spark fears of recession, right? If it significantly rallies, right, it could spark, fears of stagflation or, inflation. So both outcomes probably would be bad for the market. If it comes within expectation, it's kind of slowly trending lower as expected, then I think that's positive news for the market, right? So you don't want to have any surprises on CPI and PPI data, one way or the other. That is probably the most important information next week, right? Earnings season already kind of secondary. They're important. They're moving individual stocks, but they're not going to move the market. The market is going to be moved by macroeconomic data, CPI, PPI data, inflation data in general, or geopolitical risk, right? We still don't know what is happening in Israel and Iran. Looks like retaliation is imminent, maybe over the weekend, right? So again, that is another risk in the market that's worth considering. Dealer exposure, right? So spiders going into the next Friday. We've seen this volatility in April, right? When we had a pullback, it started happening after the VIX and equity expiration. Same things, the market started pullback, when July expiration started. This is when the kind of market reached the peak and start falling, kind of deteriorating. So again, this is kind of a vulnerable setup, because right now we do have a support at 515 level, right? There are some positioning, pretty large positioning at the 520, right? And 520 and 515 level. So 520, 515 level is pretty well positioned, right? Like I would be surprised to see a break below 515 by next Friday, right? Unless there's some kind of news, right? Bank of Japan says, you know what, now that market stabilized, we're going to raise interest rates. I mean, probably I'm exaggerating, you know, likelihood of that happening probably small, right? Hopefully they're not going to make this decision every week. But something like that obviously could break the 520 level. After August expiration, right? I'm looking at the August expiration, gamma exposure, right? The idea is that how our dealers are positioning, right? At what levels, at which strike price levels we have high open interest, right? So at 520, right now we have high open interest that expires next week. After the expiration, right? After the expiration, we don't really have much positioning, right? Any significant position, 20, 30,000 is at 500, right? At 500. So there is really no support for the market between now and, you know, 500 after this expiration. So more likely than not, we're trading in the range 520, maybe 530. We'll see where we're going to close today. For now, small caps are down 0.5%, spiders slightly lower, semis are down 1%, QQQ slightly lower. VIX is a 22 handle, still elevated, but a lot lower than 60, right? So there's some fear in the market, but not a lot. And I think a lot of people just not going to take large positions until, you know, end of next week, right? Because end of next week, we're either going to try to close the second gap and get to 545, 550, right? That's one outcome. 545, 550. Another outcome, 510, 500, right? I'll be surprised if, after, end of next Friday or, Monday, Tuesday of the following week, when these positions get August position roll off, I would be surprised to see market still between 530 and 520, right? We're either going to be at 550 or 510, right? Similar price action in last year. I don't think there's any, maybe the velocity of the move is different, right? The speed of the move, the acceleration, but similar setup, right? We reached the peak towards the end of August or July. August, we had a pullback. We had a strong rebound, right? After the actually August expiration, we had a strong rebound, right? And then, when everybody came back from their vacation, the pullback started, in September. So I think that's probably core scenario, right? One of the probably most probable outcome, right? That we rebound, we try to recover half of the losses, maybe 2/3 of the losses. And then towards September, as we're approaching closer to elections and still kind of uncertainty what the rate hikes, what the interest rate's going to be, pull back. End of August is Jackson Hole, right? So I think if Powell again doesn't give clarity of what's going to happen in September, right? He says it's on the table, but we're not cutting rate. You could have similar reaction when the market does pull back, right? If in end of August he says, listen, there's a lot of instability in the market, we've seen these dislocations due to carry trade and unemployment is ticking up, we're most likely going to raise interest rates in September. If he says something like that during Jackson Hole, which is in 2 weeks, then the market could recover all the losses and even make new highs, right? But so a lot of it just depends on these decisions. As a trader, you have to be prepared for both different outcomes, right? You have to prepare to different outcomes. That's why I encourage you to always go through these scenarios, right? And just decide, right? Core scenario, right? Repetition of last year, right? We drop. Maybe next week we have some positive news from PPI, CPI, kind of within the expectation, and we recover, 50-day moving average 550, right? Those kind of these head and shoulders, right? Very common price pattern, occurs very, many times. Sorry, something like that, right? And then towards September, we have another leg down and retest, right? So that's scenario number, I'll call it 2, right? So scenario number 2, we revisit the lows, maybe break the lows, right? April lows are at 490, 495. So that's scenario 2. Scenario number 1, Powell says, no, we're going to raise interest rates. There's de-escalation in Middle East, and earnings are strong, better than expected, and inflation continues to subside. Unemployment is stable, rate is stable around 4.3, 4.1, and we regain the highs, or maybe even break the highs, right? That's scenario number 1. And scenario number 3, more evidence of deterioration of economic activities, and we break 490, we break April lows, right? We break April lows, so number 3. So as a trader, or as a short-term trader or long-term investor, I would think in these terms, right? What are the 3 scenarios that are possible? What is the core scenario, right? What do I think is the core scenario? What do I think is the worst case scenario? What do I think is the best case scenario, right? And then you allocate your money for different positions based on these, your core scenario, and you hedge for the worst case scenario, right? You hedge for the worst case scenario, and you allocate for the different scenarios. So let's go over that exercise. How many of you think that we are heading higher, right? Scenario number 1, earnings are strong. Powell is gonna commit to lowering interest rates in September, maybe as much as 50 basis points. And market continues to go higher. Joseph 2. Chuck, how are you? Strikes, would you sell 30-day cash secure put on Google and NVIDIA? Yeah, so let's Google and NVIDIA, we'll talk about that. So Chuck is asking about cash secured put. We're going to talk about that. Andre is 2, Joseph 2. Anyone else? Andre, Don, Ed, John, Joseph, Luis, Martin, Peter, Renata. Renata, welcome back. Haven't seen you for a while. Vanessa, Tish, Shaquille, welcome, guys. What do you guys think? Scenario number 1, we're heading higher. So number 2, we're trading in a range and revisiting the lows. Scenario number 3, more evidence of recessionary pressures, and we are breaking through April lows. 2, 2, 2. Okay, everybody's 2. Okay, I like to go with the crowd. I'm gonna go 2 as well. I think we are stuck in the range similar to last year, going into elections, potentially revisiting the lows or even lower, right? April lows. I think April lows will hold or close to that, right? It's pretty strong rebound in the market, and we're trading somewhere between 550 and 490, right, in the next few months, right? Something like that. And then after elections, probably closing the year close to 560, right? I think Goldman Sachs already came out, and a lot of the large institutions came out and said they're holding their target for the end of the year, 540, 560, something along those lines. All right. So that's scenario number 1, scenario number 2, scenario 3. I'm gonna go with 2. Peter, 3, thank you. Question was on Google and NVIDIA. So same thing, I would look at positioning, right? The question is, if I do cash secure put, what strike price do I select going into September expiration, right? 30 days from now. So very important to look at, not what Vlad thinks, but what are the positioning, right? At which strike price does the people buying hedges going into September? So the first strike is 145, implying 10% pullback in Google, right? I think, if you set scenario number 2 or 3, it's reasonable to assume that Google can reach 145, 10% pullback between now and September. So 145, right? So we're already at 200-day moving average. We could get 145, right? That's April lows, right? Or close to April lows. right? So April lows are around 150, 145. So it's reasonable to assume if we have another leg down in the market and we have scenario 2 or 3 that we are reaching 145, 150 level. I would also look at our friends at bar chart and see what is the expected move in Google between now and September, right? Because Chuck considering selling cash secured put, right? Cash secured put means you have to have a larger portfolio, right? And you want to own 100 shares of Google. Keep in mind, 100 shares of Google is $16,000, right? So it's a pretty large allocation. You have to have, average account is $10,000, right, in Yellow Tunnel and Tradespoon. So average account cannot hold 100 shares of Google in their account, right? It's just too much allocation. If you have $100,000, right, or $200,000, which is then maybe that's appropriate. So just always keep in mind, just because Chuck is selling cash secure put, that doesn't mean Vlad can do the same strategy, right? So we all have to pick our own strategy based on how much cash we have, how much money we're managing, and what is our risk tolerance. So Google expected move between now and September is around 10%, right? So based on the implied volatility, demand for puts and calls right now, and current VIX level of 22 and Google volatility, you should expect 10% move between now and September in Google. And obviously it could be 10% up, regain most of the close gap 1, close gap 2. Google has been weak, right? It's underperformed the market, right? Spiders already and QQQ already closed the first gap. The second gap, Google has not, right? They had weak earnings. So just Chuck, another thing to consider, you are trading a weak stock, weaker than QQQ, weaker than Spiders. It's something to consider, right? If I don't know what would be, let's see, Microsoft. Microsoft is also weak, right? So Microsoft is also weak. Meta, let's look at Meta. They had decent earnings. Meta is doing better, right? So something to consider. Maybe it makes sense to sell cash secure put on Meta because it should outperform Google and Microsoft in the next 30 days, right? Because it's the strongest stock. But since we talked about Google, let's talk about Google, right? So 10% would imply, 150. And in terms of positioning, you do see this is where people are start hedging. So I would select 150 strike. Right now, you have to actually go in and say, does the risk justify me selling 150 put? Okay, what's the return, right? Can I get 2% return on Google if I sell September? And Google is a strong stock, right? Maybe it's underperforming 30 days from now, but I believe in Google and it will recover, right? It's an AI stock. It doesn't care about the competition in search, right? With ChatGPT, I'm a strong believer in Google, and I want to own these shares, right? I want to own these shares, or I'm not concerned that I'm going to own these shares by September expiration. Okay, so 920, 15% implied move. We're talking about 145 strike, $1.69, right? $1.69. So you can get 1.5%. If you do 150 strike, you can get closer to maybe 1.5%, right? Close to 3%. So that would be the thought process. I would still consider hedging, maybe just buy 125 or 130 put, still do a credit put spread, maybe spend a little bit of your premium just on hedging, right? Because it could be scenario 2, it could be scenario number 3, right? You just don't know. So for that reason, I would spend at least some money doing credit put spread. Chuck, let me know that answers your question. Same thing with NVIDIA, right? You would look at the estimated move. I think it was close to 20%. Right? We are approaching NVIDIA earnings end of August, almost the same time as Jackson Hole meeting. 22% implied volatility move, right? So NVIDIA could be 20% up or 20% down, right? And you can look at the open interest, right? 20% move on NVIDIA would be 200-day moving average would be 80 April lows. So if NVIDIA is at 80, you shouldn't be surprised, right? Because that's based on implied volatility, based on dealer positioning, this is what people thinking about, that NVIDIA could be an $80 stock, it could be a $130 stock, right? Both scenarios are possible based on Jackson Hole meeting and based on NVIDIA earnings end of August. So I would pick 80-85 strike. NVIDIA is more volatile. Let's see how much money you can get for 80-85 strike in NVIDIA going into the September expiration. Let's see, NVIDIA, September. Did I pick the right strike expiration? All right, let's see, NVIDIA. 85 strike. Put $2.38. So you can get 2.5% on NVIDIA, right? If you say, Vlad, AI is here to stay. I don't care about this short-term, volatility. I don't mind owning 100 shares of $85 stock, which would be $8,500, right? 9,000. You're committed to $9,000 investment. Probably not, not suitable if you're managing only $10,000, right? You don't want to put 100% of your portfolio in one stock, especially if NVIDIA doesn't deliver on the earnings. But if you have $100,000, okay, then, or $200,000, maybe that's the right strategy, right? Any questions on NVIDIA and Google and how to deal with scarce secured puts? Any other questions? All right, in terms of some of the tools that we offer at Tradespoon, you can see spiders, right? You can see our stock forecast toolbox. You can analyze any stocks. Model has been fluctuating between gains and, uptrend, downtrend, middle trend. Right now it's turning negative. Model is turning bearish. Basically says, you know what? We don't see a lot of momentum beyond 530. I don't know if I necessarily agree with the model, right? Based on the price action, model is absolutely correct, right? Bears are in control. We are approaching overbought levels. Bulls are kind of losing the momentum, right? In the past 4 days, we didn't really make any new highs. I don't know what the positive catalyst could be. Model doesn't know what a positive catalyst could be, but I can look at the macroeconomic data and basically say that next week, I know that we have PPI data on Tuesday, right? And we have CPI data on Wednesday, and I know VIX is going to expire. August VIX monthly is going to expire, and that can create volatility in the market. So model is negative, doesn't see momentum above 530, but I do realize that based on the CPI, PPI data, and expiration data, we could be at 545 or 550, or we could revisit 510. Because if I do switch to the if I do switch to 6 months, prediction, right? This was posted on August 1st, right before the sell-off. The model actually doesn't see a lot of momentum below 546, right? So the scary trade and tick up in unemployment data significantly, reversed the short-term trends, right? It reversed short-term trends. So what used to be a support is now overhead resistance. So 546, right? The 50-day moving average, I would say this is your overhead resistance right now. So those are the models. That is something you can use, and you can type in any stock or ETF symbols and do the similar analysis. We do have company screen. You can see as of August 1st, which sectors are actually in uptrend, right? And which are in downtrend, right? Which one are weaker or stronger. You can enter your symbols, right? Any symbols that you're watching, like utilities was one of the signals, right? So let's look at the utilities. Sorry, active trader. So you have PEG, today NASDAQ, right? So NASDAQ stock is outperforming. So we do offer services, right? These models that we think, which stock, despite market correction, which stocks are still in strong uptrend. like NASDAQ, right? Great earnings, almost at probably multi-year high. If not all-time, let's see, is it multi-year high? Yeah, so close to multi-year high, right, to 2023 high, and it's a strong uptrend. So not everything is trading down, right? There's stocks like NASDAQ exchange or utilities, right? Or some of the consumer staples like Coke continue to outperform, right? And that's also area of concern. People basically say, listen, we're going to sell our Microsoft and Google position. We're going to rotate into utilities, right? Whether it's ED or Coke, right? Or PAC. They're overbought too, so I'm not sure. How, if you want to chase these trades, maybe wait for a pullback. But the point being is that people are rotating into the safety asset classes, consumer staples, healthcare stocks, and utilities. So that's active trader. We also, we give you suggested entry prices. So on active trader, we're looking for 1% price fluctuation, right? And split the trade into two, especially with market being volatile. You probably want to split the trade into two. And you can either trade stock or options, right? We can give you suggestions with active stocks, or you can go in and trade options, right? Using the same levels. This is a very common question. Do if I trade options, at what point do I enter or exit the trade? The answer is, at the suggested stock price level, right? So if I say stock, look for 67, 70 level, then you would use it NASDAQ. You would use options the same level, but you would just trade either monthly or weekly options. So that's active trader. Let's see. Any questions? Okay. So that's active trader, weekly trader model that looks for longer term projections, right? A monthly trader. We do have a research center, right? So you can actually see seasonality, right? There's also seasonalities in play, right? We can see for now pretty high correlation, right? You have June, July, strong months, continue to rally, usually reach the peak in August, and you have short-term pullback going into the middle of August, then rebound towards the beginning of September, and then another leg down in October. This is average of all years, right? So if you look at seasonality, August and September is not the best time to get aggressively bullish on the market, right? And it looks like for now, with 65% correlation, we are trading at those levels. Also, we have probability calculator. Basically tells you right now you should expect the market, 520 to 540, right? We could stay in this range between 520 and 540 in the next few weeks. Any questions on some of the tools? If you want to know what I trade, or we also have Scott, Keith doing the live trading room, what these guys are thinking about, then you can participate in our live trading room. Elite Circle, I would encourage you to start with Elite Circle. You could be participating live or watch the recordings of Morning Bell and Closing Bell, right? The first hour and the last hour of the session. Then you can also look at the recordings, and you can enter your phone number and get alert every time I trade, right? Whether it's Disney trade or how I'm hedging. I have Spider's position, right, where I'm hedging, or IWM where I'm hedging my spread. And you can see both stock and option trades, some of the earnings trade like Disney and others. Any questions? GERN. So question is on GERN or CERN? Biotechnology. I'm not familiar with the stock. Biotech, I mean, it's doing better, right? There's something happened here, right? Some FDA approval. Biotech in general, I think with interest rates is very sensitive. It's been underperforming the market. It has rallied back to 100 level. This was very popular trade this year. It's facing 102, right? It rallied in March, but then wasn't able to break this. Just looking at the price pattern, it's outperforming biotech. It's a strong uptrend, kind of recovered nicely. You know, you have a clear support level, right? Whether it's $4 or $3.50, these are your support levels. But a lot, you know, these individual biotech are driven by FDA approvals, and you know, you have to do more. It's more of a fundamental analysis than technical analysis. But because technically it could be strong, but any decision, you know, where likelihood of approval of the new drug, you know, deteriorates, and then, you know, especially these, you know, small cap stocks, right? Especially the small cap stocks. If you look at Pfizer or Biogenesis or Amgen, okay, they have diversified pipeline. You know, if you look at the $2 billion company, $1 billion company, usually they just have a couple of them in pipeline, and if it gets approved, then they move higher, and if it gets rejected, they move significantly lower. Healthcare stock, do you trade healthcare stock? I usually go to S&P 500, right? So Amgen, I mean, they had a poor result, so that got sold off. You know, something that's not a small cap. I usually don't trade small caps. $173 billion, well, they're diversified, right? I mean, Pfizer looked pretty good, right? It was oversold. Looks like it started to recover, but now kind of pulled back was the market this week. But it looks like a strong rebound, and kind of the worst is behind us. So Pfizer is one. I do like Teva Pharmaceutical, but you know, larger company in healthcare, you know, in biotech space that, you know, have a diversified pipeline, right? So Teva Pharmaceutical, you know, it looks like a strong stock, you know, diversified. It's not a $2 billion company. It's you know, $20 billion company. So it has more products in the pipeline, and with each, you know, FDA approval, it fluctuates less. Thoughts on trading TLT? Personally, I'm long TLT. I know I've been off a year or so, but it seems like it's still a pattern of higher highs and higher lows in TLT. If it's a recession, TLT should be significantly higher. If inflation comes down, TLT also should be higher. Maybe not as much, but it should be higher. So if it's disinflationary or recession, I think TLT is going higher. The only way if CPI and PPI starts going back up and we're back to inflation, right, and there's no signs of recession, then TLT maybe can revert its course. But for now, it's still a pattern of higher highs and higher lows since October of 23. You know, we are facing 2024 high. I think any dislocations again, and TLT is going to break through this level, right? So for now, just keep in mind, if you long TLT right now, you're probably bearish on the market. You're probably bearish on the market because, at least short term, because if we are not in recession, TLT is oversold, and I mean, overbought, and it could drop, right? We already had reversal this week. But for now, we are trading in kind of inflationary environment, right? Yield is down, right? When yield is down, market is going to be down. Today, it doesn't seem like that's the case, but you know, yield dropped. I think, you know, market is going to be under pressure, right? Market is going to be under pressure. I mean, it's kind of flat right now, but I think, you know, either the yield is going to creep up and then the market will rally, or if the yield drops further, then the market will follow, right? So it's kind of trading opposite of what it did past year. Past year, yield is higher, inflation, market sells off. Now yield is higher means we're stabilization, the chances of recession is subsiding, so the market rallies. So that's the correlation between the two right now. All right, you guys been a great audience. Thank you very much. We do have a closing bell today. Keith is going to do the closing bell. I'm going to do the morning session on Monday. And I would keep an eye on VIX, right? The fears are definitely subsiding. The fears are subsiding. We're sitting on the support level. So we need a catalyst, either a catalyst to get us back to 15 level, at least August lows, or catalyst to get us back to 30, 35, right? So keep an eye on VIX. 20 level is usually that line in the sand, fear or no fear. So there's a little bit fear left in the market. And I think people are waiting for CPI, PPI data. They're waiting for NVIDIA earnings. They're waiting for Jackson Hole meeting. Thank you very much and have a great day. Thank you, Joseph. Andre, Ed, John, Joseph, Luis, Martin, Michael, Peter, Renata, Shaquille, Srinivas, and everyone else. Thank you very much and have a great day.